Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Wall Street gets a boost from cooling U.S. inflation, but trade troubles roll on, with President Trump vowing to respond to the EU's tariff countermeasures. We'll unpack it all with HSBC's Stephen Major. Moscow's move, and a U.S. delegation heads to Russia for talks. Bloomberg understands President Putin is looking to stretch out the timeline, but will likely agree to a truce. And a taxing problem. The rand slumps after South Africa's second biggest party says no to revised plans for a VAT hike, raising concerns about the coalition. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. Yesterday, the focus was on two developments in U.S. markets. Number one was tariffs, as ever, the new tariffs unveiled by the Trump administration on steel and aluminium, and then the countermeasures that came through from EU and Canada subsequently throughout the course of the day. But then we also had that CPI print coming slightly softer than expectations. So that gave a bit of a boost to U.S. equities, and we saw a turnaround in sentiment, at least for yesterday, with Wall Street indices ending up in the green. Today, not the same sentiment prevailing in markets. You can see futures, S&P futures, dipping towards the downside, down 0.3%. Eurostoxx futures also down a little bit as well, about 0.4% weaker, despite the better close that we had for the European market yesterday. And a lot of the positivity around the European market is nothing to do with tariffs or the CPI data, but all about the discussions vis-a-vis Ukraine as the world awaits to see how Russia are going to respond to that truce proposal. So all eyes on that. We're going to discuss it on the show. Fixed income also in focus. Interesting price action there. Today we are about 1 basis point lower, just sitting shy of 4.3%. But surprisingly, after that softer than expected CPI, yields actually rose up. So perhaps tells you a little bit about positioning in that market. We will unpack it shortly with Steve Major from HSBC. And then Brent right back up again to the $70 handle, trading sideways. But we did see a positive day, the first day in a couple of weeks, actually, for oil, that we've seen some positive momentum come through. The energy complex traded 2% higher. But let's switch over, and this actually is going to set us up nicely for the hit with Averill. But take a look at this. I thought it was interesting to note that there has been not only divergence in performance between the Chinese equity indices and the S&P, but that the correlation has actually turned negative over the last 90 days. So whatever is happening with these U.S. markets, whether it's concerns around AI, earnings, tariffs, you name it, China seems to be doing its own thing. And actually the performance of MSCI China suggests that is the case. The index is up more than 20% year to date. Compare that to the S&P, which is down almost 5% year to date. So with that, let's check in on how markets in Asia are faring this morning. Averill is in our Singapore studio. Give us a rundown of what's going on, Averill.
Yeah, Jumana, I think for much of this year, China has been kind of doing its own thing as far as stocks are concerned, but not quite the case today. It's still about those tariff uncertainties, the overhang as the clock ticks down to the start of next month. So we're seeing those declines in Chinese tech that's dragging the Hong Kong benchmark. And amid this negative, gloomy mood in the region, we're still continuing to see that rotation out of chip stocks, including in Taiwan. And don't forget, we also have this looming showdown towards averting potentially a U.S. government shutdown. So nothing in the way of, I think, lifting spirits in the region today, although Japanese stocks are a bit of an outlier, and this is boosted by the banking names still doing well today. We are seeing, even though yields are dipping a little, they've overall been quite elevated, and the expectations for next week from the BOJ is still one of a hawkish hold. We heard from the BOJ governor speaking in Parliament today, and he didn't sound dovish. Jumana.
Averill, thank you so much. Yeah, keeping a close eye on the Japanese developments as well. Well, Treasuries and the U.S. dollar were little changed on Thursday trading after cooler than forecast U.S. inflation numbers. Joining us is Stephen Major, Global Head of Fixed Income Research at HSBC. Let's just start with the U.S. markets here and the price action that we've seen. It's been a tremendous rally the last couple of weeks for U.S. Treasuries. I would have thought on a softer CPI, though, that the trend lower would continue. That isn't the case. Do you think there's some sort of market fatigue?
It's fair enough, Joanna, in that the context is important. We've had quite a rally all through this year, actually. I think we were on the back of 6-7 weeks of yields falling, some 50, 60 basis points. So it has become the case that single data points don't always fit the price action. And I think you've probably been picking up on that quite a bit with your comments and the show that you're doing here. And so I think people want to rationalize every single piece of economic data and link it to the market, but the two are going in different directions.
Yeah.
And this is what you get. I mean, it could be a huge inflection point, or it could be that markets are focusing on something else.
What is your sense of how the US data has been printing the last couple of weeks?
Well, I think it's unambiguously weaker on the real economy side, and I'm talking about activity data. And you've had things like the Atlanta Fed GDP now that brings it all together quite nicely. So
it's a negative number.
It's a negative number, but if you've got the real activity data softening and the surprises around the data, which is the thing that matters, is at the margin that matters here, then the real yield on US bonds has been following that. It's completely normal, right? Inflation hasn't been doing that much, and I think most people would recognize that 6 months ago the Fed actually pivoted from the inflation focus towards employment, as it turns out prematurely, but they did anyway.
Yeah.
And I think that they're still waiting to get back on the path to easing. We're just in the pause moment at the moment. I think that's a good explanation.
So the market is pricing in a terminal rate of around 3.5%. Can you actually have strong conviction on where the terminal rate is going to be, given so much noise around tariffs, uncertainty around tariffs, but also what the Trump administration is doing on the immigration front and the perhaps realignment of the labor market?
Look, many people roll their eyes when I talk about longer run equilibrium, and you use the word R-star and stuff like this. People don't want to talk about it. But the thing is, you have to have a view on it if you're trading bonds, because the bond yield is not just about today's policy rate, it's about where it's going in the future and where it settles in the longer run. So 3.5, by the way, is 50 basis points above where the Fed guides. It has been as high as 4 in the forwards, right? So the market has given you up to 100 basis points of protection against the 3. So that I think explains why yields have been sinking through the year, because people priced in too much at the start of 2025. So it's very hard to have a high conviction on equilibrium, but frankly, you have to have some kind of anchor to your process or framework. And I don't really think the longer run equilibrium has moved that much from before the pandemic. And by the way, that's controversial, because I'll meet 99 out of 100 people will tell me that's incorrect. But then, as you just said, how could you possibly know right until afterwards?
Yeah. Do you think the Fed will actually deliver on the 3 rate cuts that are priced into the market this year?
Yeah, well, that's been our economist's forecast, and he's stuck with that through the noise. When I hear 3 rate cuts, do you know what I say? I say it's like a 50% probability of 6 and 50% probability of 0, right? And I'm not being facetious. That's kind of how markets work, right? It's going to be kind of all or nothing. It might turn out to be 3, but the market's not wrong to imply something in the middle.
Yeah, you know how you were talking about the changing narrative, or at least the focus of the Fed, the shift away from CPI to labor employment numbers. Why is no one talking about the fiscal premium in the U.S. curve anymore? Why is it no longer a concern?
Well, I think we spent all of last year pricing some of that in. Now, this is where we get to the other one where people roll their eyes. Term premium.
Term premium,
Right, and it's a good way to lose your friends, actually, to talk about stuff like this.
I've lost many over the years.
Right, imagine having a conversation in a restaurant with a friend about R-star and term premium. But anyway, so the term premium is the risk premium. It's that extra bit of yield for all the things that you thought you knew about, but actually you don't. And so all of last year, and you can see it in the various models, it was being incorporated. So we come into 2025, and so the view that there's this fiscal problem and inflation is sticky, very much in the price. And so, in fact, you know what's happened. Term premium is an issue in Europe.
Yes. So
it's moved from one place to another.
Yeah, so let's talk about that now. Massive repricing in European bonds and German bonds, I should say. But actually, it's lifted all European yields with it.
Yeah.
Isn't this specifically a German announcement? Why has the bond market jumped to pricing in a higher fiscal premium for all of these European bonds?
By the way, I think it may have had an impact on JGBs and China government bonds. I'm hearing this from my colleagues because of the cross-currency hedging. Well, there was this thing happening already late last year in that there was a kind of plan. There was the Draghi plan. Right? And so the idea of there being common issuance for infrastructure and generally restructuring, deregulating the European economy. That kind of plan was in place. The defence spending really wasn't there. That's a kind of new thing. Now, Germany is just one country. It's not the whole of Europe. But if this was a credit market, if we're talking about credit, it would be like the highest quality name. It would be a bit like Apple or Microsoft issuing, and it wouldn't really have a big impact on the yields. So it seems to me that the market may have overreached a bit in repricing the ECB's equilibrium when just one country has launched this huge fiscal boost. Now, it could be that other countries follow. But the point I would make is that Germany can actually afford it. I know it seems like a lot of money because it is.
The starting point is lower than other countries.
Yeah, they've got 58% of GDP sovereign debt. It's one of the lowest. Yeah.
Do you have a view on the tightening of the cross-currency spreads between the US and Europe? Obviously, there's been a massive tightening at the beginning of the year. US yields have gone down and European yields have gone up.
Yeah.
Are we at the point now where it's not enough, do you think?
I think it's almost gone too far, whereby Europe has got cheap compared to the US, and so the explanation for the spread move comes from both sides. US yields have sunk when people thought that they might rise, and European yields have risen. It's come out of nowhere, actually. I mean, the consensus view, all those trades coming into this year have been proven completely wrong. So European bonds have repriced on this fiscal shock. Some of it's term premium, some of it's repricing of equilibrium policy rates of the ECB. Whatever it is. But it's a very brave thing to say, but we think that Europe has got a bit too cheap. Now, you have to be very brave these days to say that kind of thing, because it goes against the momentum. But it does look like the yields are way above longer run equilibrium.
Yeah. Okay, well, that's a good place to leave it. Strong call on European bonds then. Stephen, always great to chat to you. Thanks for coming on. Stephen Major, Global Head of Fixed Income Research at HSBC. Now for a look at some of the other stories we're following today. U.S. Senate Democratic leader Chuck Schumer says his party will block a Republican spending bill to avert a government shutdown on Saturday. He urged the GOP to accept a Democratic plan to provide a month of interim funding instead. Schumer's declaration heightens the risk of a shutdown at a time that financial markets are hypersensitive to new disruption. Intel has named Lip-Bu Tan as its next chief executive, entrusting a former board member and semiconductor veteran with one of the toughest jobs in the industry. 65-year-old Tan is tasked with restoring the fortunes of a pioneering chipmaker that's become an industry laggard, struggling with market share losses and manufacturing setbacks. And still ahead, how the region's markets are dealing with the impact of geopolitical tensions. That's with GFH Financial Group. But up next, Russia is expected to draw out discussions with the U.S. over Ukraine. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Russia is preparing to respond to President Trump's call for a ceasefire after Ukraine agreed to a U.S.-brokered 30-day truce deal. But President Putin is expected to stretch out the discussions to seek better terms. Meanwhile, European defense ministers are looking for ways to provide security to Ukraine, including a reassurance force with troops, aircraft and naval vessels. Joining us now is Bloomberg senior editor in Asia, Bill Ferries. Well, yesterday, Bill, when we were talking about this Jeddah breakthrough, we said that it is very much now in Russia's court. The ball is in their court. How are they likely to respond? What do we know from our reporting?
Well, you're right. I think that agreement solves a problem for Ukraine and that it got some of that intelligence and military aid flowing again. But I think the bigger problem here is going to be getting any Russian buy-in at all. Russia's made some very maximalist demands when it comes to their expectations of what might lead them into a truce. And they've even said as recently as December that they're not necessarily interested in a truce that doesn't lead to a longer-term agreement. And their requests include things like no troops from NATO nations in Ukraine as a tripwire. They want to see Ukraine have no access to NATO membership. They want to see it become essentially a neutral nation with a greatly scaled down military presence. So those are all likely to be unacceptable demands of Ukraine. The big question is, what will Donald Trump be willing to accept? And if he thinks that Ukraine is being intransigent at all in this, whether he again tries to cut off military and intelligence aid to Kyiv.
Yeah, and I guess, the bigger picture question here is, what is the point of entering into a 30-day truce if there are no signals that both sides are committed to long-term peace? They could, either side, use it to regroup. Bill, separately, European defence ministers have also been meeting to discuss what the UK Prime Minister Keir Starmer has called the coalition of the willing, and with a view of providing additional military support and peacekeeping presence in Ukraine. What do we know about Europe's plans at this point to help bolster Ukraine's defence?
I think European leaders right now are scrambling just to canvass all of the different countries on the continent to see what would you be willing to provide, would you be willing to send troops. When they talk about a coalition and the willing, it suggests that non-NATO nations might have some kind of a role in a peacekeeping force or in other ways of enforcing the peace if a broader agreement can be reached. I think there's also a rush going on to have some sort of security presence or security guarantee in place in case Donald Trump basically decides that Russia's terms are good enough for him and that he wants to see this ended right away. Europe wants to be able to go to him and say, when we get to that peace deal, here's what we're willing to provide. But it's very far from clear, based on what we know of Putin's demands right now, whether he would accept really any European troops in Ukraine after this all winds down.
Bloomberg senior editor in Asia, Bill Ferries, thank you so much for the reporting. Now, China says it will host nuclear talks with Iran and Russia in Beijing on Friday. The meeting will be attended by deputy foreign ministers from Moscow and Tehran, with parties set to exchange their views on the nuclear issue. Last week, President Trump called on Tehran to negotiate a new deal or face military action. And coming up, Arab foreign ministers meet with the U.S. Special Envoy to the Middle East, Steve Witkoff, in Qatar to discuss the Arab-endorsed plan for Gaza. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. U.S. President Donald Trump said on Wednesday that no Palestinians will be expelled from Gaza. He made the comment during a press conference with the Irish Prime Minister Michel Martin. Now, meanwhile, the foreign ministers of Saudi Arabia, the UAE, Qatar, Egypt and Jordan held a meeting with the U.S. Special Envoy to the Middle East, Steve Witkoff, in Doha, where they agreed to continue consultations and coordination on the Arab-endorsed plan for Gaza. For more on this, Danelee, Bloomberg's UAE bureau chief, joins me now. Maybe let's just start with President Trump's comments. Significant, of course, because there was this feeling that when he put forward the Gaza reconstruction proposal, that it would necessarily entail the forced displacement of Palestinians. He's yesterday said there will be no expulsion of Palestinians from the territory. How do we read those comments, and how does it get factored into the ceasefire discussions that are taking place now?
I think it was more than a feeling, right? Because he said, I want these 2 million Palestinians to move to Jordan, to Egypt. So his initial plan was to move every Palestinian out of Gaza and create the so-called Riviera of the Middle East. But then we saw this reversal yesterday, which is kind of a positive sign, especially for the Arabs. It means that, whatever efforts they were putting together in that meeting we had last week may have actually done something or had an impact on the president's plan. So we saw Arab officials also meeting for the first time a U.S. official, Witkoff, in Doha to discuss their plan. And this is the first time in quite a couple of years that the Arabs come together for, a reconstruction plan in Gaza. They have it all planned out. They want the Palestinian Authority to take over governance for a little bit until they figure, things out. And they said that they will continue coordination and consultations, like you were saying, but based on the Arab plan. So the Arab group, let's say, they want any discussion to be based on their plan, to be derived from this plan, which means no expulsion of the Palestinians, of course.
Yeah, and separately, there are also discussions that look like they're going to be taking place between Israel and Lebanon, obviously mediated because they're not having direct discussions vis-a-vis the eventual full withdrawal of Israeli troops, but then also the delineation of the border.
This is very significant. I mean, first they have to figure out what they're going to do with the 5 hill posts that Israel is currently occupying in South Lebanon. Lebanon is really pressing France and the U.S. for Israel to withdraw from these areas. This is a major pressure for a president like Joseph Aoun, who is also U.S.-backed. He's telling them, well, not he telling him, but the idea is if you keep Israel here, then you're only giving Hezbollah the excuse to remain, to keep its arms, to have this excuse of resistance against Israel. We have to take out this excuse so I can go into the south and deploy heavily. And the U.S. and the Lebanese army is really backed by the U.S., right? Equipped almost exclusively by the U.S. administration. So the idea is we have to start working on these border disputes. Now, the border delineation, this is going to be difficult because when Israel withdrew in South Lebanon in 2000, this is more of a withdrawal line and not a border line, so it's a de facto one. And Lebanon says Israel does stay and is almost occupying 13 points. And we saw in Haaretz today, like a report saying this is going to be very difficult for Israel to actually negotiate because there is no intention to actually delineate that border now, because from Lebanon's side, it would mean some concessions from Israel to withdraw from places like, Tile el-Kfar Shuba, the Kfar Shuba Hills, or the Sheba Farms, which is also disputed with Syria. But it would entail concessions from Israel, and Haaretz is citing an Israeli official that they might not be ready for that.
Interesting. Dana, thank you so much for the comprehensive reporting. Dana Khreish, Bloomberg's UAE Bureau Chief. Now, the EU is to pledge funds to help with reconstruction in Syria at a donors conference it is hosting this week. The bloc's first ever commissioner for the Mediterranean said officials continue to evaluate the interim regime that holds power in Damascus. Syria's foreign minister is to attend Monday's meeting despite recent clashes in the country. The Iran supreme leader says his country is not pursuing nuclear weapons and dismissed U.S. President Trump's calls for negotiations as a trick. Ayatollah Ali Khamenei says he isn't after a war, but that Iran would definitely hit back in the event of a military attack. Iranian state TV reports a top advisor to the UAE is visiting Tehran to deliver a letter from Trump addressing the Islamic Republic's leadership. And coming up, from flying taxis to data centers, we discuss AI moves in the Middle East next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Wall Street gets a boost from cooling U.S. inflation, but trade troubles roll on, with President Trump vowing to respond to the EU's tariff countermeasures. Moscow's move as a U.S. delegation heads to Russia for talks. Bloomberg understands President Putin is looking to stretch out the timeline, but will likely agree to a truce. And a taxing problem. The rand slumps after South Africa's second biggest party says no to revised plans for a VAT hike. We report live as the first EU-South Africa summit since 2018 gets underway. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Taking a look at markets this morning, we are slipping to the red. S&P futures and Euro Stoxx futures trading underwater, down about 0.3%. Despite a better close yesterday for both Wall Street and European indices, Wall Street reacting to the cooler than expected inflation print that came through and shrugging off some of the concerns around tariffs. A similar theme for Europe, where we're seeing a lot of positivity in some of these European stocks. European defense stocks continue to be a strong theme there as as the market sort of prices together the possibility of a sustained truce between Ukraine and Russia. 10-year yields also in focus. We're about 2 basis points lower today, just shy of 4.30, though we did move upwards yesterday despite the softer than expected CPI print. As you were saying earlier with HSBC Stephen Major, the market is not placing as much emphasis anymore on single data points and rather around the full narrative of what's been happening with the U.S. economy. And given how far we've traveled in 10-year yields over the course of the last month, no surprise that it's meeting some resistance. And then Brent is trading flattish today, but crucially above the $70 mark. We saw a rebound yesterday of north of 2%. Switching over, and our terminal chart that I just wanted to flag is to do with volatility. Given the moves in the market, how much we've seen in equity and fixed income, no surprise to see this, but Treasury and equity volatility have indeed been on the rise at the highest levels, close-ish, of this year of 2025, but still a far way away from where we were, say, towards the end of last year. But this is just to give you some context around the moves of the last couple of weeks. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, let us know what's been going on with these markets.
Yeah, I mean, the mood is still gloomy, and you saw how Chinese Taiwan stocks have kind of been languishing today. So I thought I'd just highlight what we're seeing in Japan as well, because that is a market that's been outperforming, not just today, but it's actually headed for weekly gains after 2 weeks of declines. Now, some of this is related to how Japan is managing to avoid the worst of the U.S. metals tariffs. But you also have the valuations making things look attractive. I think MLive's Mark Cranfield highlighted on the blog that it's roughly 14 times expected earnings. So, you know, this is much lower than the average from the past 5, 10, 15 years. And then, of course, you have the Japanese banks that are still doing well amid higher yields. And of course, Japanese bonds have been selling off, part of what's happening globally, but also the expectations of what the BOJ is set to do. And today we're seeing the 10-year bond futures hitting the lowest level since the year 2009. Jomana.
Avril, thank you so much. Now, the Middle East is making big moves in AI. The UAE has announced up to 50 billion euros of investment in French data centers. Abu Dhabi investment arm MGX has a plan to contribute $7 billion to President Trump's AI infrastructure plan, while Saudi Arabia is working on a $100 billion AI powerhouse project to rival the UAE. Joining us now to discuss the growth in AI and more is Najwa Aaraj, CEO of Technology Innovation Institute. Really good to have you with us, Najwa.
Thank you for having me.
It really does feel like this is an exciting time for the GCC, UAE in particular, placing a lot of focus on these cutting-edge technologies. Let me start off by asking you what technologies you are most excited about. What projects are you most excited about this year?
As we see the progress in advanced technologies today, you see particular focus on AI, quantum, and increased digitization. And this means the need for further cybersecurity technologies, for blockchain technologies, and related ones.
How do you see the arrival of DeepSeek to the market and the possibility of the advent of these large language models that are low-cost alternatives to what's already around?
It's actually a very good question. So if we see what has been happening since 2022 till now, you have a lot of generative AI, large language models, and multimodal models that have come up. Some were closed source, some were open sourced. And the main focus was on developing these models, and there has been this extensive, let's say, and large consumption of compute power, right? So DeepSeek came and it gave an alternative to this need for large amounts of compute power. So through software engineering techniques, through memory management, through, let's say, optimization techniques, they proved that, yes, you do need compute power, but there is a lot to be done on optimization that can be an alternative, and that can give you alternatives that are lower cost and that can be actually fit even if you don't have these compute powers, and then you can put them on large-scale infrastructure as well as energy-constrained infrastructure.
So you would say it's a game changer then?
It's a game changer indeed,
Yeah,
yes.
okay, interesting. Let me ask you about Arabic language models. How do you think the region is doing on that front?
So there has been initiative regarding Arabic language models. We have seen a JACE that came out of G42. Us at TII, we do have a NUR model that is trained on native Arabic language. I think the main issue with Arabic today is the availability of data and how data is processed. However, as soon as we can move through this obstacle, you will see more and more language models that are tailored to Arabic. So you would see language models that would be native in Arabic, that will be used across multiple, let's say, deployments in government and government services and others that use natively the Arabic language.
Yeah. The other big focus of the UAE and increasingly Saudi Arabia is investment in data centers. How is that supporting or bolstering the local ecosystem?
I think what you see happening in the UAE and in Saudi Arabia is the focus on developing sovereign AI capabilities. From one side, this allows you to have some sort of digital independence and also a big contribution to the AI global scene. And what I mean by developing this AI sovereignty is from one side, you would be developing the large language models that are proprietary to you, but also to be able to scale on the AI infrastructure. And this is very important. AI infrastructure from a data center perspective, but we also see increasing investment in the semiconductor industry, which today, if you look at it, is reaching some sort of S-curve, and it has to keep up with the scaling computational needs that are needed. There is more investment in new architectures and new design that will meet these requirements.
Yeah. I want to round up with a question that I thought was quite interesting because it looks as though TII is doing a partnership with the GCAA that the UAE is going to start mapping out air corridors for autonomous air taxis and cargo drones.
Yes.
How far away are we from that becoming an actual reality?
So the future of mobility is really autonomy. And today you see increasing level of autonomies across air, in the ground, and in the sea. The UAE itself has been a pioneer in this, and TII has played a major role in the development of this technology, but also in pushing regulatory sandboxes. And within this frame comes the agreement that you have mentioned between TII and GCAA and Aspire, our sister company. And the main aim is to work together on this regulatory framework and optimized air corridors for the deployment of drones for civilian air traffic, for cargo traffic, etc. We're not there yet, but this is one of the first initiatives in order to start deploying these type of autonomous aerial vehicles in everyday transportation and the logistics sector, and then this will lead into a faster and into a more smooth transition to that.
Do you think the goal there is for the UAE to be the first country in the world that rolls this out more broadly?
I think this is definitely the aim, and today you see a lot of, if I may classify them as sandboxes or technological and regulatory sandboxes that are deploying air taxis and are deploying aerial vehicles, indeed.
Interesting. Okay, so maybe in a few years I can fly to work as well. Thank you so much for joining us today. Really nice to chat to you. Najwa Aaraj, CEO of Technology Innovation Institute. Thank you so much. Now, the first EU-South Africa summit since 2018 gets underway in Cape Town today. The European Union and South Africa have disagreed in the past over Russia's invasion of Ukraine, but are now rebuilding ties over President Trump's actions. For more, Jennifer Zabazaja, our chief Africa correspondent in Johannesburg, joins us now. It feels like this is a bit of a significant moment, Jen, because the last time this EU-Africa summit was held was, I believe, back in 2018. Why has it taken so long?
Yeah, and Jumana, it was just after President Ramaphosa actually took office. So, yes, there has been quite a big gap since these two sides have had this summit. But the significance really goes to what you were just mentioning there in the intro. And really over the past few months with President Trump in the U.S. Continuing to target South Africa in particular for some of his own opposition, his opposing views on some of the laws that have been passed here. We're seeing the EU and South Africa Africa want to strengthen their own ties. Now, this is important for both sides. If we take a look at the EU side, South Africa is the only strategic partner on the continent for the bloc. When it comes to South Africa, it is very important for the EU because it is its number one trading partner. And so both sides really see this as significant. And as you were mentioning, we have seen both of these parties have disagreements in the past, not just over various conflicts, but also in particular over the Israel-Hamas conflict, with South Africa actually taking Israel to the ICJ over what they see as crimes against humanity. But when we were at the G20 meetings just a few weeks ago, we heard from the EU saying that let's put some of our differences aside and work towards rebuilding and strengthening this relationship. And we actually heard Ursula von der Leyen say that South Africa can count on Europe, and I know that Europe can count on South Africa. So we'll likely see a lot more of these pronouncements over the next 2 days of the summit.
Yeah, Jen, and what do you think are going to be some of the tangible takeaways that we can watch out for?
You know, we did hear that the EU is planning to announce what they are calling a global gateway investment package. And what they tout this as is this is really a doubling down on clean trade and investment. And they take a look at three key priorities that they want to focus in on. They want to help South Africa with its own vaccine production. They want to help with infrastructure build and connectivity. And they also want to strengthen infrastructure more broadly through investment. And so we'll likely see this package being unveiled. We don't know the specific details about how much investment we're likely to see. But again, as South Africa takes on the reign as the G20 presidency, we're expecting these two parties to continue to strengthen these ties through a lot of these initiatives that they have. There's also this notable, I guess, pulling back of support from the U.S., in particular on the Just Energy Transition Partnership, which is meant to help South Africa transition away from coal. With the U.S. stepping back, the EU wants to step in, and they've said that they plan to continue to help with investment. So, yes, that is the likely thing that we expect them to be focused on when we see Ursula von der Leyen and also President Costa here in just a few hours, actually.
Yeah, thanks, Jen. Jennifer Zawazaja, our chief Africa correspondent in Johannesburg. And sticking with South Africa, South Africa's second biggest party has rejected revised plans for a VAT hike, raising valid concerns about the coalition. The country's finance minister has proposed raising VAT by 1 percentage point to 16% by mid-26. Now, the budget speech was called off last month in a coalition row over plans to increase VAT by double that amount this year. And we'll be talking more about that in the next hour of Horizons. And Zimbabwe's stock market regulator has ordered companies to report earnings in the local gold-backed currency with immediate effect. The instruction is the latest move to encourage acceptance of the ZiG, which has struggled to establish itself. Companies have argued the switch adds accounting complexities owing to the currency's steep slide. It's lost 96% of its value since its launch last April. And coming up, how the region's markets are dealing with the impact of geopolitical tensions. We discuss the details with GFH Financial Group next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The GCC is playing a major role in the global stage as facilitators of peace talks. Saudi Arabia has played host for the Russia-Ukraine ceasefire deal talks, while Qatar have done the same for Israel-Hamas talks. Now, joining us to discuss the impact of all this, but more specifically on Mideast markets, is Abdulrahman Saif, Executive Director of Equity and Fund Management at GFH Financial Group from Manama. Good to have you with us. Good morning to you. Look, let me just bring it back to markets. The global markets, actually I should say U.S. markets specifically, we've seen a pullback. S&P very close to correction territory. Some concerns at the beginning of the year that valuations perhaps had reached too lofty levels. How do we look over here in the GCC in terms of valuations versus the U.S.?
That's an interesting question. From a valuation point of view, the GCC has been trading at, in my opinion, reasonable levels. If I exclude the Saudi market, actually most of the GCC markets are trading low double digit, if not single digit. So there's a lot of potential in the GCC market, and we see that.
Why do you think that the valuations tend to be slightly lower? Is it a liquidity concern? Is it concerns over geopolitics, the fact that oil prices have been trending lower? What really is at play here?
I think all of the above will play a role. Geopolitics played a major role over the past couple of quarters, but also expectations for oil prices to be lower, and liquidity has improved significantly, to be honest with you, but a lot of geopolitical issues tend to make investors shy away from the markets.
Well, speaking of investors not shying away from the markets, there has been robust IPO activity in the last couple of years. We've been talking a lot about it with our colleagues. And what's interesting is you're seeing a broadening out of the types of companies that are listing. What is that doing to raise the relative appeal of investing in GCC markets?
So the IPO market has been quite interesting. We've seen a number of a variety of companies coming to the market, and the interesting part is it's across different sectors, and that is quite encouraging. The only thing that I have as a criticism of that is valuation. So when those IPOs come to the market, we would love to see them coming at attractive levels that will make the IPO successful and IPO to take off. Aside from Saudi market, we've seen a number of IPOs in the region that did not do very well. So it boiled down to valuations in the end of the day. And investors in the region are becoming more aware of that and more sophisticated.
What about dividends? One of the major themes for the region has been investing in companies that do offer attractive dividend yields. Aramco, one of them, for example, and they just recently in their earnings have reevaluated the payout of those dividends in the coming years. How is that likely to influence the opportunity in the region?
Dividends has become a major play in the region, and not only from a payout point of view, but also investors look at forward guidance. So companies that did not come with positive forward guidance for 2025, we've seen some selling pressure on those names. But yes, investors are looking at dividends and looking at companies that have reasonable valuation, potential growth, but companies that are paying dividends. And that plays kind of to the major theme of GFH as well. These are the type of investments that we look at as a company.
A pleasure to chat to you today. Thank you so much for coming on. Abdulrahman Saif, Executive Director of Equity and Fund Management at GFH Financial Group. Thank you. Now, coming up, the Democratic Republic of Congo and M23 rebels will be meeting next week for peace talks. Details up next. This is Bloomberg. Peace talks between the Democratic Republic of Congo and the Rwanda-backed M23 rebel group will take place in Angola on March the 18th. Conflict in the eastern part of the African nation has displaced hundreds of thousands, while Congo says over 7,000 people have died in the fighting. For more, Bloomberg's Ondira Ganga joins us now from Kigali, Rwanda. Well, Ondira, you've been on this story for the last few weeks. What has led to the turnaround by the DRC and prompted this openness to negotiate with M23?
Hi, Jumana. So like you said, this is a really big turnaround. President Felix Tshisekedi has always been very adamant that he's not going to talk with M23, let alone negotiate with them. He's termed them as a terrorist group and accused Rwanda of backing them. And if I just take you back to when M23 seized Goma, he said that an appropriate and swift response was being coordinated and that DRC wasn't going to cede an inch of its territory. Well, that's exactly what happened, and the response never came. And this speaks to the strength and positioning of M23. They've appointed new leaders in Goma. They are holding rallies to try and amass support for themselves and also capitalize on President Felix Tshisekedi's growing unpopularity. M23 have always called for dialogue, and when this news broke, M23 leader wrote on X, it's the only civilized option to resolve current crisis that has lasted for nearly 4 decades. And for context, things are not the same way they were in 2012 when M23 took Goma. There was a coordinated response between the UN and the Congolese army, and a ceasefire was reached. Also, back then, there was a lot of international pressure on Rwanda that led to the economy shrinking into half. This time around, the first round of sanctions felt like a slap on the wrist. They can easily absorb it. They've built really strong relationships at the international stage, and they're hoping that when push comes to shove, they can leverage this relationship. So bearing all that in mind, it serves in the best interest of President Felix Tshisekedi to start turning things around domestically for himself.
Yeah. Andiro, let's stick with DRC. They're well known for cobalt mining practices. Cobalt prices are absolutely soaring in markets now. What role are they playing?
Jumana, so DRC announced a surprise ban of exporting cobalt for the next 4 months to try and clear out the glut in the market. And this is what is sending uncertainty in the supply chain. We have seen prices jump by 84%. On Tuesday, a pound of cobalt was selling for $10.5, and this is the highest price it has been since July of 2023. Analysts say at the international stage, there's about 85,000 tons of cobalt, and this is like 6 months' supply of global consumption. What will happen over the next course of weeks is that prices are going to keep rising speculatively, but in the long term, it's still really difficult to predict where the prices will eventually land.
Yeah, and also that has knock-on effects for everything to do with the energy transition. So keep an eye on the price of cobalt. Andiro, great to have you as ever on the show. Andiro Ganga in Kigali, Rwanda. A quick look at equity futures before we head to the second hour of the show. Things are slightly negative for the S&P and European markets, despite the more positive close that we had yesterday. Look at Nasdaq futures down about 0.7%. Coming up in the next hour, Barclays' Mitul Kotecha joins the show with his market outlook, and we'll speak to Danelee Masia from Deutsche Bank on the back of South Africa's budget. Plus, Asyad Shipping CEO is on the company's IPO debut. We'll be back in a moment. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Wall Street gets a boost from cooling U.S. inflation, but trade troubles roll on, with President Trump vowing to respond to the EU's tariff countermeasures. Moscow's move as a U.S. delegation heads to Russia for talks. Bloomberg understands President Putin is looking to stretch out the timeline, but will likely agree to a truce. And a taxing problem. The rand slumps after South Africa's second biggest party says no to revised plans for a VAT hike, raising concerns about the coalition. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa. And Jumana, of course, we were dissecting what was happening in the U.S. with that inflation print. There's also the geopolitical discussions that are happening around Ukraine. And here in South Africa, a lot of the focus was on the budget that we finally got tabled. But it's uncertain what this looks like going forward. But a lot for markets on Wednesday.
Yeah, I'm looking forward to your discussion in a short while with the Deutsche Bank economist. But let's bring it back to markets. You can see behind me there is quite a little bit of red on the board. Futures slipping, S&P down 0.4%, Euro down, Euro stocks down 0.3%. This despite the better close for Wall Street yesterday. U.S. investors paying close attention to that softer than expected CPI print. So a bit of a downside came through. Transportation costs have been dropping. Keep a close eye on the airline industry in the U.S. So that's having a knock-on effects to these CPI prints. But on the back of that, we did get a better close today, leaning negative. European markets also better closed yesterday on back of optimism surrounding the potential for that Russia-Ukraine truce. Today slipping. 10-year Treasury sitting below 4.3 now. We're about 2 basis points lower. And despite the fact that we had a lower than expected CPI print, what we did get was a move upwards in yields. A bit surprising. Typically, you tend to see yields move lower after a weaker than expected CPI. But that wasn't the case yesterday. And it seems seems as though some of the rally as of late, and we've come a very long way for treasuries in the last couple of months, is beginning to lose steam. So keep an eye on these levels here, 4.3%. And then Brent back up above $70. The theme, obviously, for oil has been a downtrend the last month. We're about 10% weaker over the course of the month. Yesterday, we did see a bit of stabilization come through with the energy complex up 2%. But switching over, I do want to highlight one chart that I thought was interesting, and that is the fact that MSCI China and Chinese indices seem to be completely decorrelating versus U.S. markets. And we've been talking about the fact that S&P is very close to correction territory, down almost 10% from its peak. Magnificent 7, down about 15% year to date. That has not had an impact on some of these Chinese indices. And for the year, MSCI China is up 20%, while the S&P is down almost 5%. And this is just a chart of the correlation. The 90-day correlation between S&P and MSCI China has actually gone negative, which is surprising. So they're actually working in opposite directions. So with that in mind, let's also check in on how markets in Asia are faring today. Based on what this chart has told me, Avril, if U.S. futures are trading negative, then I guess the handover from Asia has to be positive.
We're actually seeing it in the doldrums today. I mean, China stocks, I guess, today not immune to these concerns, right? The tariff overhang, potentially a U.S. government shut down, those concerns continuing to weigh. And it's headed for a fifth session of declines on the Hang Seng. And this could be one of its longest losing streaks so far this year. So you get the sense that China not immune to some of these broader concerns as well. And then you have the TAIEX, part of the selling in global chip stocks. And today we had a central bank official saying that there is a currency risk amid all these stock market outflows. And as you may know, Taiwan actually spent a record amount already last year trying to defend the currency. So stock market flows have macro implications as well. Japan is a bit of an outlier today, that outperformance fueled by the surge in the bank stocks. And then we also have valuations looking attractive. But keep in mind, as well as we head for weekly gains on the Japanese indices, it's also because the country has, for the most part, avoided the worst of some of these U.S. tariffs.
Thanks so much, Avril Hong in Singapore for us. Avril, we'll check back in with you in just a bit. Let's turn back to the U.S., though. President Trump says the U.S. will respond to the European Union's countermeasures against his metals tariffs, raising the risk of further escalation in his global trade war. For more, let's bring in news desk editor Jill Desis. Jill, walk us through the latest retaliations and how far the expectation is that this will continue to escalate.
Well, Jen, that's certainly the risk here. I mean, I think that when you look at something like what the EU is saying here with these reciprocal tariffs targeting a lot of U.S. goods, agriculture, industrial sectors really here, I mean, you're looking at something that could impact some, $29 billion U.S. dollars worth of U.S. goods. So pretty significant escalation there. And then you take that on top of, obviously, all of these other tariffs that you're weighing from the United States, the, Canadian response. You've got these, blanket steel and aluminum tariffs that are going into effect here. And then you've got this April 2nd deadline for potentially a further escalation there. I mean, we're really taking in totality something that's affecting, billions upon billions of dollars worth of goods, really disrupting global trade. And, you have to imagine that when you've got a response from Trump like that, where he's saying that they're going to respond to that, they're not really going to let this type of retaliation stand from the EU, that it does kind of threaten to kind of drive that higher, obviously leading to a lot of the uncertainty that we're seeing here.
Yeah, and especially as they're targeting a lot of Republican-led states. Jill, when we think about the response that we did hear from the EU and Canada, how does it compare to some of the other nations that are also being targeted in their own right?
Well, it certainly, I think, is quite a bit more forceful and aggressive. I mean, as you said, with the EU, you did have something that actually sort of matched the U.S. tariff level, sort of like for like. I mean, you're looking at the level of goods, the value of goods really impacted at the same level that some of these U.S. tariffs taking effect are really hitting on. As you said, the EU also kind of went into pretty robust detail about the fact that they were mostly targeting goods that were in, produced in Republican states, whether that be agricultural goods, that kind of thing. thing, although I think that there's some, including soybeans, that might hit blue states like Illinois. In addition to that, though, I mean, really those fulsome responses from the EU and Canada kind of stand in contrast to what we've seen, particularly from some nations in Asia Pacific, whether that be Japan, South Korea, Australia, that are still kind of in this negotiation phase. The UK also has kind of said they're sort of waiting and seeing. And really, Mexico, which of course has really taken the brunt of a lot of these tariffs, waiting for that April 2nd deadline. So it does kind of show you that some of these, whether that be, a bloc like the EU, whether that be Canada, are really prepared to respond very forcefully and aggressively, while others are trying to figure out where exactly maybe they can get in on some deal making with the Trump administration.
Yeah, if we didn't have a trade war before, we definitely do now. Bloomberg's Jill Deesis. Jill, thanks so much for joining us.
Thanks, Edis. Well, let's get the market reaction now from Mitul Kotecha, head of FX and EM macro strategy Asia at Barclays. Really good to have you with us. Help us make sense, if you can, of what all of these tariff announcements mean for the trajectory of the U.S. dollar. The theme for most of 2025 has been one of weakness. Does that change?
Good question. Look, I think the dollar has, as you said, come under a lot of pressure, and the speculation, or at least the analysis that dollar would be a major beneficiary of tariffs, is being completely unwound here, right? And I think part of this is just the uncertainty itself around tariffs and what tariffs we're actually going to see, what sort of deals are going to be on the table, the back and forth, the flip-flop in terms of actual tariffs implementation, the reprieves. And that's caused itself a high degree of uncertainty over tariffs itself. Secondly, of course, there are growing worries about the U.S. economy, and we've seen a weakening in the soft data, consumer confidence, the Conference Board, Michigan confidence, etc. And that could start filtering more and more into the hard data. So I think markets are worried about this. We've seen U.S. asset market underperformance. And so all of these factors are really starting to play into a weaker dollar. Now, our analysis suggests a lot of the weakness is already behind us, for example, in the euro, against the euro, but we wouldn't rule out a little bit more downside in the dollar from here.
Okay, since you brought up the euro, lots to ask there, but the one thing that I've been looking at is the correlation between what's been happening with yields and some of these currencies. So euro has been rising in tandem with the rise in bond yields in Germany, but then you're also seeing a similar thing happen with JGB yields and the yen. To what extent do you think it's yields that's dragging FX as opposed to the other way around?
Oh, look, I think there is a good argument to be made for yields having a bigger impact on FX. And we've seen that, as you mentioned, for euro dollar. The fact that we've seen a very sharp spike in bond yields on this news that Germany would be finally releasing some of its fiscal debt brake, and that there'd be more spending being done, this 500 billion euro fund, any spending above 1% on defense, for instance. It's a game changer to some extent, or regime change in our view. So that's already push German bond yields higher. And at the same time, US Treasury yields have been moving lower. And it's no surprise that euro dollar has reacted in that sense. Arguably as well, some of the move in Japan is very similar. We've got the Bank of Japan that's become relatively more hawkish. We've actually recently increased our view of a terminal rate in Japan to 1.25%. And the yen is strengthening perhaps on that contraction in yield differentials. So I think that could continue for now. And that is keeping the dollar at bay at this point in time. Again, look, we are a bit hesitant to call this a big slide in the dollar going forward, just because so much is priced. And at the same time, we've seen such a big move in yields already that we are hesitant to say, look, and sentiment has also shifted quite a lot. But look, we can't argue with the impact of yields at the moment, or yield differentials.
Yeah, before I move on, let me just ask you, do you have a target on dollar yen then, given your upward revision to the terminal rate?
Oh, look, I think our view is that we still may see some more downside. I was actually just in Japan a couple of weeks back and met a lot of investors there. And on the ground, at least from a lot of investors that we spoke to, a lot of people are looking for dollar yen to get to 140, 145. Now, that's not necessarily our forecast, but you can see where the direction of travel is on that currency pair.
Yeah. Let me ask you about dollar renminbi. Just given the focus on the NPC, China's latest growth projections, and what they're doing to sort of juice up the economy, why have they been so cautious on the fixing, on the yuan fixing, do you think? Why are they not allowing it to appreciate more?
Well, I think China is playing a fairly clever game here, that in a sense that keeping the fixing relatively tight at a time when the dollar is weakening, what it means is that China, okay, yes, the yuan is not benefiting from dollar weakness, but at the same time, it does gain, the fact that from a CFETS basis, the currency has already been weakening. In terms of trade weighted, China gains some competitiveness in that angle. So the fact that it's not allowing the yuan to strengthen much, even as the dollar weakens, while other currencies are strengthening, is good for Chinese exports because it does raise competitiveness. And I think another angle here is also that China is probably just waiting to see where the dice fall. What really happens ultimately with tariffs. Is there going to be a deal on the table? Currently, average tariffs are 30% on China, but I think China's playing a bit of a waiting game here.
Yeah, as are the rest of us, none of us know how this is going to play out, and not even President Trump, I would say. All right, thank you, Mitul Kotecha. Really good to have you on the show, head of FX and EM macro strategy, Asia at Barclays. Now, Chinese authorities are reported to have summoned Walmart executives over reports it asked suppliers to bear rising costs incurred by increased U.S. tariffs. The post on a Weibo account that regularly signals Beijing's thinking about trade said such demands risk fracturing the global supply chain and hurting the interests of both U.S. and Chinese companies and of American consumers. Bloomberg understands the U.S. Federal Trade Commission is moving ahead with an antitrust probe of Microsoft that was opened in the waning days of the Biden administration. The Bloomberg scoop suggests President Trump's new FTC chair, Andrew Ferguson, is going to prioritize continued scrutiny of the tech giants. Bloomberg has learned HSBC is placing some of its investment bankers on short-term retention agreements. This as it winds down various businesses in a broad overhaul led by the London-based lender's new chief executive. In some cases, the bankers are on 3 to 6 month work arrangements to finish client mandates across Europe, Asia, and the Americas. And still ahead, South Africa's budget exposes rifts in the coalition. We discuss with Deutsche Bank. But up next, Russia is expected to draw out discussions with the U.S. over Ukraine. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Russia is preparing to respond to President Trump's call for a ceasefire after Ukraine agreed to a U.S.-brokered 30-day truce deal. But Bloomberg understands President Putin is expected to stretch out the discussions to seek better terms. Meanwhile, European defense ministers are looking for ways to provide security to Ukraine. Now, to discuss this and more, Bloomberg's Russia economy and government editor Greg Sullivan joins us now. Yesterday, we were talking about the Jeddah breakthrough and how it was a real big deal that the Ukrainian delegation had signed on to the U.S. proposal. But of course, now the ball is in Russia's court. What are we expecting Russia to do and to say?
Well, there's a few things. I mean, the first and most immediate is that Trump's special envoy, Steve Witkoff, is en route to Moscow and is expected to be in Moscow this week and meet with Putin. We should learn more about what the Russian demands are or where the Russians stand after that meeting. But immediately we know that eventually Putin is expected to agree to an eventual truce, but he wants certain concessions. So he's likely to try to drag out the process, try to delay. He sees that time is on his side. Up until recently, he was making battlefield gains in the east, slow but costly, and he's almost dislodged Ukrainian soldiers from the Kursk region, things he wants to accomplish before agreeing to a truce.
So you just mentioned that he's going to be looking for more concessions. I mean, already, and we spoke about this yesterday, President Trump, even before beginning the negotiations, already said that he rules out the possibility of Ukraine joining NATO. What further concessions are Russia going to be asking for?
Well, there's a few things here. In the short term, to agree to any kind of truce, we expect that he would probably demand that he doesn't want the supply of weapons to Ukraine by Western powers to agree to any ceasefire. But more longer term, he has made some significant concessions. One, he doesn't want NATO peacekeepers in Ukraine as part of any sort of ceasefire deal. Two, he doesn't want Ukraine to join NATO. He wants territorial concessions, especially starting with what he's made from the war gains. And he wants a smaller Ukrainian military. So there's some pretty significant demands there.
Yeah, so that's happening. But at the same time, you have the Europeans getting together. You've got the defense ministers meeting. You have the UK Prime Minister Keir Starmer trying to put together what he's called a coalition of the willing, i.e. the countries that are willing to send peacekeeping troops to Ukraine. So where are the discussions going from that perspective, and how does it tie in to the likelihood of Russia accepting the ceasefire proposal?
Well, obviously, they're at odds here. You have European powers discussing a potential coalition of the willing, as you said, to be a peacekeeping force in Ukraine. European powers were canvassing other European countries to see who was willing to put peacekeepers in the country, and if they weren't willing, what other contributions they could make, whether that was peacekeeping forces in countries near Ukraine or supply of armaments or ships. But obviously, that's at odds with what Russia is demanding. Europeans are really concerned here because this is not just Ukraine's security, but European security at that. So they are really considering ways. But in the short term, they see a strong Ukrainian army as the first guarantee of defense. So they're looking at ways to bolster that, again, at odds with Russia.
Exactly, which is exactly at odds with what President Putin would like to see. Greg, thank you so much for walking us through it. Incredibly complex dynamics. Bloomberg's Russia economy and government editor, Greg Sullivan. Now, coming up, Arab foreign ministers meet with the U.S. Special Envoy to the Middle East, that is none other than Steve Witkoff, to discuss the Arab-endorsed plan for Gaza. The details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. U.S. President Donald Trump says no Palestinians will be expelled from Gaza. He made the comments during a press conference with Irish Prime Minister Michael Martin. Meanwhile, the foreign ministers of Saudi Arabia, the UAE, Qatar, Egypt and Jordan have held a meeting with the U.S. Special Envoy to the Middle East, Steve Witkoff, in Doha, where they agreed to continue consultations on the Arab-endorsed plan for Gaza. For more on this, let's bring in Bloomberg's Dan Williams, who is joining us from Jerusalem. So, Dan, did this meeting between the Arab nations with Steve Witkoff actually advance discussions for this extended ceasefire in Gaza?
I think that's a safe assumption. Witkoff is a busy man. He also has the Ukraine-Russia file to deal with on behalf of President Trump. So when he came to Doha, it appears that he's dealing with a number of loosely but nonetheless related issues. One of them being the Gaza plan. Arab foreign ministers apparently trying to persuade him on their alternatives for what President Trump envisaged, which would have been literally outlandish in terms of a mass removal, mass relocation of Palestinians, a US-led development of the Gaza Strip that would take 10 to 15 years. So it would appear that the Arab world has been galvanized into coming up with an alternative and is talking to Trump's point man at the same time when he is in Doha trying to see if he can cobble together another truce between Israel and Hamas in Gaza. So from what little has been published out of Doha so far, and all sides are keeping things very close to their chests, it would appear that there is some kind of package deal being discussed.
And Dan, happening at the same time, we did see Israel and Lebanon meeting for border talks. They had U.S. and French mediators present. What's the likelihood we'll actually see progress on this dispute at least being handled?
I think the fact that Israel was the most forthcoming about this meeting, we've heard next to nothing from Lebanon about it, very little from the United States and France, would suggest that this is early days. However, Israel for some time now, even preceding this 17-month-old war, has spoken aspirationally of a potential future peace deal with Lebanon once Hezbollah is removed from the picture. It's worth remembering that just 3 years ago, with U.S. brokering, Israel and Lebanon managed to put together a maritime demarcation deal for the various energy rights in the Mediterranean. According to this statement by Israel, it would appear that as a result of a holding truce between Israel and Hezbollah, a bit shaky, but nonetheless holding, Israel believes that it could eventually, with the Lebanese state, achieve some kind of normalization of relations that would involve mutual recognition of the land border, an agreed demarcation of the land border between the countries. Again, this has yet to be confirmed by Lebanon, but it's worth remembering that in Beirut, everything is still a work in progress. The interplay between the new government and Hezbollah. Hezbollah is on a back foot due to its losses during this war with Israel. But nonetheless, I imagine Lebanese see that as still something that has yet to be finalized. They will not be in a rush to be talking about accommodation with an old enemy to the south until they've established things domestically and stabilized the situation.
Dan, great reporting as always. Bloomberg's Dan Williams in Jerusalem for us. Thanks so much for joining us. And the EU is to pledge funds to help with reconstruction in Syria at a donors conference it's hosting next week. The bloc's first ever commissioner for the Mediterranean said officials continue to evaluate the interim regime that holds power in Damascus. Syria's foreign minister is to attend Monday's meeting despite recent clashes in the country. Now, coming up, after South Africa's second biggest party rejects a planned VAT hike, we talk about whether the dispute can be resolved. More on that next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Wall Street gets a boost from cooling U.S. inflation, but trade troubles roll on with President Trump vowing to respond to the EU's tariff countermeasures. Moscow's move as a U.S. delegation heads to Russia for talks. Bloomberg understands President Putin is looking to stretch out the timeline, but will likely agree to a truce. And a taxing problem. The rand slumps after South Africa's second biggest party says no to revise plans for a VAT hike, raising concerns about the coalition. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. And markets still reacting to that slightly softer than expected CPI print yesterday, Jen. That sort of trumped, excuse the pun, all of the other news that came out.
Yeah, you meant to do that, Jumana. I saw that there. Exactly. We are seeing markets still reacting to that and still really weighing what the future of this trade tit for tat that we're seeing looks like moving forward for all sides. But let's just take a look at where markets are positioned ahead of the trading day. You were just mentioning there that cooler than expected CPI report that we did get on Wednesday. Right now, if we take a look at U.S. equity futures, pointing towards a lower open, S&P futures down just over 0.4% there, after we did see on Wednesday a start to the trading day in the U.S. A bit turbulent for U.S. equities, though they did end up closing in the green after we did get that CPI report. But still, we saw both. We're still seeing the S&P and the NASDAQ over 3% lower on the week. If we take a look at the U.S. 10-year yield right now, it's trading at about 4.29% there. We're seeing yields backing off ever so slightly, and we did see yields slipping across the curve as investors continue to seek those safe havens amid a lot of concerns about what the U.S. economy looks like. We were mentioning this at the top of the show and throughout the show. And EM currencies more broadly on Wednesday were trading a bit mixed amid a lot of these uncertainties that persist for investors. The rand, though, stood out for me because, in part, I am in South Africa. But, of course, we did get the budget speech from the finance minister, and we saw the rand at one point slumping more than 1% before pairing some of those gains to end the day at down about 0.7% right now. The rand to the dollar is about 18.36 there. And finally, we have Brent crude trading it's still negative right now, but still slightly above that $70 a barrel point there. And still, there's a lot of uncertainties about what supply and demand really in the market looks like. And really quick, before we move on, let's just take a look at our terminal chart. We are still seeing rate markets pricing in additional Fed rate cuts, 3 right now as likely for 2025. And we're hearing even more concern expressed by different Fed governors over the past few days and weeks about the uncertain path of the U.S. economy. But that's a look at what the markets are pricing right now. Let's, though, check in on how markets in Asia are faring. It's been a few hours there since they've opened. Avril Hong is standing by in our Singapore studio. Avril, what are you watching?
Well, I mean, you alluded to this, right? The Fed rate cut bets being ramped up is really because of these concerns about the U.S. economic trajectory in the face of erratic policy making. So that seems to be the overhang for markets in the region today, not just about tariffs, also potentially a U.S. government shutdown. Greater China markets are underperforming today. Even the Nikkei, which earlier clocked gains of as much as 1.4%, those gains fast evaporating. Now, amid all this, I'd also just highlight what we're seeing in India. This is a stock market that has come under immense pressure since late last year after a GDP growth miss, and then these concerns about frothy valuations. It also now seems like a key pillar of support for stock markets there is buckling. We're seeing how mutual fund flows, even though they were positive for the month of February, they decline. The picture across the region today just reinforces these concerns and the idea that until we see more policy clarity out of the US, any stock market rebound that's likely to be unsustainable.
Thanks so much, Avra Hong in Singapore for us. Great to have you on. Now let's turn back to South Africa. The rand slumps after South Africa's second biggest party says no to revised plans for a VAT hike, raising concerns about the coalition. South Africa's finance minister proposed scaling back tax increases and curbing spending in a bid to resolve a standoff. Joining us now here in studio is Danelee Masia, chief economist for South Africa and Sub-Saharan Africa at Deutsche Bank. Danelee, great to get you on, especially after this budget. So it was an accomplishment that he was able to get this tabled, but did he go far enough to address a lot of the concerns here for this economy?
I guess, Jennifer, that there's so much, thought that's going into this budget. It was really difficult for them to come up with another alternative that would have been pleasing to the market. I guess scaling back on the VAT was probably necessary. What was really tough, I think, for consumers is that many of them are going to take a bit of a bigger hit now that their income tax brackets are not shifting. So it's not as good, I guess. Our opinion really is that it's going to be a little bit harder for consumers to absorb this. But on the expenditure side, they had to make some really tough decisions to reinstate where the workforce have been depleted, and as a consequence, service delivery has faltered.
But there's still concern about the debt burden that is here in South Africa and plugging those holes. Did the finance minister address this in this budget that was unveiled?
Exactly, no, they did. And they made it very clear as of the February budget that was that they want to strike a balance here so that they don't actually need to borrow more, that they can keep that peak on the debt ratio set at 25-26 fiscal year, and more so that they send the signal to markets that they're not going to break that pact. And so they delivered. And this, I guess, is why you see the rand having actually pulled back somewhat, is that they've stuck to those promises.
But still, the rand is still trading lower, right? It has slumped over the past few days. And we also did see government bond yields increasing. So it still feels like investors aren't fully convinced.
This is where the GNU really comes in. And I think the biggest breakpoint for me is not so much what's in the budget. It is whether the GNU, or more broadly so, the DA, is actually supportive of the budget. And this is the conversations that we have had all of yesterday as to what is the next steps now that the DA said they would not support. Many other partners in the GNU said they're not supporting the budget. So there is a concern that South Africa's government collapses. I guess that there is some really interesting nuances around this. What is really important is, two things. From a VAT and an income tax perspective, those increases will take place effective 1st of April. So despite the fact that the partners are not endorsing it, it is a government pact in the acts that really sustains their revenue streams. And then the second point is that from a government perspective, they've got 4 months in which they are still capable of spending up to 45% of their budgets last year, in the event that this budget does not get adopted. So there are a lot of concerns as to now the political process behind this, but government, luckily, is not something that will just collapse as a consequence of no budget being approved.
Got it. So then what exactly will happen next? Is it going to be a bit more debating between the Democratic Alliance and the ANC? I mean, how does this budget ultimately get adopted come May?
So we think that there is a leverage point here that the DA ultimately has, and I think many GNU partners have the same wants, that they are looking more at vociferously at expenditure reviews. The real issue here is that we could have probably avoided some of these tax adjustments had they really gone and done the audits on workers and, you know, eradicate wasteful programs that really don't generate much.
Sort of like Doge in the US?
100%. So a little bit of Doge for South Africa. But these projects take time. It doesn't get delivered overnight. And I guess that if they expedite that, maybe come the October budget, they could potentially pull back some of the tax revenues that's planned for next year. Just to replace that balance. So I guess there's a little bit of that, and politically speaking, there are 16 days now in which to come forward with either an adoption or an amendment. And it's what is in the amendment that also has various regulations attached to it. It's not so simple that they can say, we do not want the tax hikes, because those are strictly regulated. And on the expenditure side, they might have to move around a couple of things. Ultimately, it's not going to be one that has got a higher expenditure envelope. It can only go lower from here. So the outcome is a smaller budget deficit, potentially.
Okay, so this is really the first step in what seems like it's going to be quite a few long days moving forward. We have to leave it there. Danelee Masia, Chief Economist for South Africa and Sub-Saharan Africa at Deutsche Bank. Danelee, always great to get you on the show. Thanks so much. Now, coming up, an Oman shipping firm goes public in a key test of the Sultanate's ability to deliver its divestment program. That's next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Asyad Shipping has successfully listed on the Muscat Stock Exchange, raising $332.8 million. It is the latest state-backed firm to go public under Oman's wide-ranging privatization program, which includes plans to sell stakes in 30 firms and is seen as an important test of the Sultanate's ability to deliver on its divestment program. Joining us is the CEO of Asyad Shipping, Ibrahim Al-Nadhairi. Good morning to you. Good to have you with us. Are you pleased with how the IPO went yesterday?
Yes, good morning, Joanna, and thank you for hosting me. It was a great success for us. It was a milestone that we've been looking for since the inception of the company, and we were glad that it went quite well, and with a great success to the team as well.
Yeah. Were there any concerns about the timing, given the volatility that we've seen in markets the last couple of months? And also, some of your peers have decided to pull back from listing. Secondary performance has not been super strong for some of the companies that have already gone to the market. Were any of these factors taken into consideration?
Of course, I mean, we've learned from the market. As you know, it's not just only in Oman, but it's everywhere around the world. The stock market is, of course, though it's having difficulties, but this is basically the nature of our life. We take opportunities. We take these things and turn them, the challenges, and turn them into opportunities. We come with a different concept, and that is basically the robust financial profile of Asyad Shipping is, and also the substantial revenue backlog that we have, over $2 billion. Of course, we have we are coming with a leading EBITDA margin of around 68%. And also that also paves the way for us for sustainable growth. So we have a lot of things that is different when it comes to the market itself.
Yeah, let's turn to the outlook for the business this year. We've spent a lot of time talking about the impact of tariffs on global economy. How is that likely to affect the shipping business?
Well, when it comes to the tariffs, of course, this is going to be a global phenomenon. However, we feel that it can also be managed. Today, there's a lot of opportunities. We are active in more than 60 countries around the world, and we have diversified fleet that actually can go into whether it's going to be in the crude side or in the petrochemical, as well as on the gas and the containers and the bulk segment. So having this diversified fleet working in or being active in more than 60 countries around the world, we believe that is also going to give us a competitive advantage in dealing with all these changes in the market, including the tariffs being imposed on shipping.
I'm curious to see whether over the last couple of years you've actually seen a rerouting of flows or new routes opening up because of geopolitical concerns and also just a renewed focus on energy security.
Yes. So that wasn't clear at the end. If you can repeat it.
Have you seen a rerouting of flows of where vessels are being directed to because of geopolitical concerns around the globe?
Yes, of course. I mean, it happened with of course, like for example, the Red Sea issue. A lot of ships been routed through the Cape of Good Hope instead of going through the Red Sea. Fortunately for us, we were able to actually sail through the Red Sea throughout the years last year, and that also has added a lot to our in terms of the competitive advantage. Of course, we do that after carrying out a thorough risk assessment, looking after our crew as well as our assets and the charter. So we do it in like a collaboration with everyone. And shipping is always born to these kind of challenges when it comes to the geopolitical challenges. And we are living, especially here, in an area where there's a lot of activities going around. However, also we are capitalizing on Oman geopolitical relationship with different parts of the world. It's a very stabilized relationship, and we are making use of that one, of course.
Yeah. Let me just round up asking you what you think your growth priorities are over the next couple of years for the company.
Well, for us, the growth is we will continue in terms of moving forward with our fleet expansion and renewing our fleet. We will maintain a young fleet, and we'll also, as part of our medium-term strategy, we have a plan to acquire more ships between now and 2029. We're talking about an additional 30 ships coming in. We have an intention to basically invest between $2.3 to $2.7 billion in order to achieve that goal. And we will look more into increasing the number of ships as well as the cargo that we are carrying on board our ships. So we have a combination between owning ships and chartering ships into our fleet.
Yeah. Excellent. Well, congratulations again on the IPO, and thank you for taking the time to speak with us this morning. Ibrahim Al-Nadhairi, the CEO of Asyad Shipping.
Thank you very much.
To East Africa now. Peace talks between the Democratic Republic of Congo and the Rwanda-backed M23 rebel group will take place in Angola on March 18th. Conflict in the eastern part of the African nation has displaced hundreds of thousands, while Congo says over 7,000 people have died in the fighting. For more, let's bring in Bloomberg's Ndira Oganga, who joins us from Kigali, Rwanda. Ndira, what led to this turnaround by the DRC and prompted the openness to actually negotiate with M23 now?
Jen, a couple of factors led us to this moment, but just for context, President Felix Tshisekedi has always maintained that he's not going to talk to, let alone negotiate with M23. He's called them terrorists and also accused Rwanda of backing them. And when M23 took over Goma earlier this year, President Tshisekedi said that a swift and appropriate response was in the works and that they weren't going to cede even an inch of their territory. However, that is exactly what happened. And this speaks to the strength and positioning of M23. They've put new leadership in charge of Goma. They're doing political rallies to try and amass support amongst the locals and also capitalize on the growing unpopularity of President Tshisekedi. What they have always been open to is dialogue, and M23 leader says that this is the only civilized option to resolve the current crisis that has lasted for 4 decades. And it's also important to remember that this time around, things are not the same way they were a decade ago. When Goma was taken over by M23 in 2012, UN peacekeeping troops were able to drive them out. There was a peace deal. This time around, the Congolese army is really weak, and that gives M23 an upper hand. On the other hand, international sanctions back then had a chilling effect on Rwanda. This time around, it feels like a slap on the wrist. They've built really strong relationships on the international stage. And when push comes to shove, they'll be able to leverage this relationship. So it serves President Tshisekedi in his best interest to start finding a way to turn things around.
Yeah, and we're also seeing President Tshisekedi experience soaring cobalt prices. Talk to us about the DRC's role in this, especially given a lot of the turmoil right now that the country is facing.
So DRC accounts for 70% of total global cobalt production. And what they did is they put a 4-month suspension on selling their cobalt to the international market to try and clear the glut that has been in the market. And what this has done is it has sent shockwaves and uncertainty to the supply chain. We've seen prices jump by 84%. On Tuesday, a pound of cobalt was selling for $10.5. And this is the highest price since July of 2023.
All right. Thanks so much, Bloomberg's Indira Aganga with that report from Kigali, Rwanda. Thanks so much, Indira. Now, coming up, NATO has called for closer ties between the EU and Turkey as President Trump upends European politics. That story is next. This is Bloomberg.
NATO has urged the EU and Turkey to improve relations as Donald Trump forces Europe to rethink its security alliances. Joining me now is Bloomberg's Beryl Akman in Istanbul. Beryl, for a long time we've been talking about the potential accession process of Turkey into the EU. Is that conversation back on the table again?
Just like you said, Jumana, I think up until a few weeks ago, discussing Turkey and EU relations or Turkey's membership to the bloc was, not taken quite seriously. But the U.S. administration's policy direction is definitely making EU officials, I think, revisit that membership bid. That was apparent in a press conference yesterday between Polish Prime Minister Donald Tusk and Turkish President Recep Tayyip Erdogan, where both leaders highlighted the importance of having Turkey part of the bloc. President Erdogan has repeatedly said over the last few days that an EU without Turkey is unthinkable, and that Turkey can provide benefits to the bloc in terms of security and defense. And I think Turkey's NATO membership and its strategic location, as well as having the second largest army in NATO, is definitely making EU officials rethink their security alliances and their strategic alliances.
Yeah, it's also a part of NATO, and also Turkey has emerged as a major power broker within the Middle East region as well. And you've got Donald Trump testing that transatlantic alliance. So would you say it actually makes sense for closer ties between EU and Turkey right now?
I think there are a lot of factors for the EU-Turkey relations to deepen. Like we both mentioned, Turkey is a NATO member and has the second largest army. And under President Erdogan, Turkey's defense capabilities have flourished over the past 2 decades, with the president really pushing for locally produced arms, whether that be drones or armored vehicles or missiles. So the defense abilities are definitely one of its strong cards. In terms of its location too, Turkey has traditionally straddled the East and the West, and it has maintained good relations, with both the Western allies as well as with Russia and China. And we've seen in the past how this geographical location made sense. It was a key actor in having Ukrainian grain be transported to international markets, for example. And Turkey and the EU have a big economic relationship as well. The EU is Turkey's largest trade partner.
Yeah.
But that's not to say I think the relationship doesn't come without its challenges. We've seen a judicial crackdown in Turkey, and that has, in the past, drawn the ire of the EU and has been a concern.
Yeah, Beryl, excellent reporting, and fascinating to see where these discussions go. Bloomberg's Beryl Akman. A quick look at equity futures before we round out for the day. And things are leaning towards the red. All of these indices are now pulling back versus the gains that we saw in yesterday's session. But that is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai with Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe. This is Bloomberg.